Hey, what's going on, everybody? It's Matt. I wanted to shoot a quick video if you're looking how to trade harmonic patterns and just show you the best way to trade these to really minimize your risk and maximize your gains. So if you're brand new to harmonic trading, or you're looking just for a more consistent way, or you're struggling trading harmonics, then pay attention to this video. I'll walk you through the number one way to trade harmonic patterns. And really let the pattern do all the work for you. So I'll walk you through where to put your entry, where to put your stop, where to put your take profit. Like I said, the whole goal is to minimize risk and maximize gains. And you can actually implement this in your trading go forward. So with that being said, we'll just jump right in. If you guys can do me a huge favor, smash that like button. Do subscribe to the channel. I put out a ton of content. And in the description of this video, I'll also add in my personal training, coaching. You can check it out if you're interested, grab it. And I also have a free Facebook with almost 9,000 members at the time of shooting this video. So you can come over there, get good content as well on trading strategies, trading mindset, and trading money management plans. So with that being said, let's just scan a couple pairs and let's find some good setups. You can see I'm just going to scan through the 4-hour time frame. I think it's one of the best time frames. The patterns hold up very well. It does work on any time frame, but we'll just scan every pair on the 4-hour just to show you. And we'll just go through some pairs. Let's find one. Like this was a good example of going up as well as down. So this is AJ 4-hour, and you could see there's a bearish pattern here, right? It has this last push-up candle, and I'll zoom in just so you can make this easier. So it has this last push-up candle, right? So what you're looking for is the break of that structure, in this case to the downside, right? Because we're looking for a bearish move. So you got this push-up. This is the last push-up candle, so you draw a line. This next candle closes below it, meaning it broke structure. That's your signal to wait for the pullback into that base. You see, it's hard to see, but you can always pull this up on your own chart. It's literally from last week. You could see it wicked right into that level. I set a pending order. And then you can put an aggressive stop above the base of the candles, or you can put a more conservative stop above the wicks. So about a 40 pip stop. And I have supply and demand indicators on my chart as well to give you logical targets. You can see they hold up just as well as the harmonics. It pushed into this supply level and obviously shot back up. We'll talk about that move here in just a second. But what I would do is I would go for at least a 2-to-1 trade. So 80 pips is literally right at the base of that level. It's a logical level. It's a logical bounce point. So I would just take my profit there. And if you're focused on going 2-to-1, 3-to-1, 5-to-1, you don't have to worry about a couple losing trades here and there. It's not really a big deal. So you can see how accurate this strategy is. Same thing happened going up. So you got this last push down candle, which is really this one, right? This is the last down. You can always drop to the lower time frames to get better entries. Let me get back over here. And you can see this last push down was this candle. So we'll move it. Right? One of these candles. And it popped up, pulled back, off to the races. But you can also see it's in the zone, so it gives you that double confluence. You can use the candle, the D point is on. It broke up, it pulled back literally to the pip. And you could have had, let's say, 20 pip stop. And it's already almost 150 pips. So that's 7-to-1 right there. So you could easily got 5-to-1. You could easily got 2-to-1. So as long as you follow that good money management risk to reward, that's the ultimate goal, right? Pips are pretty irrelevant. It's really just about percent return and your risk to reward. So that's what you should focus your trades on. Let's just see a couple. All these pretty much did the same thing. This is a good one as well. Which one? This is AUD. USD 4-hour. You can see the last push on the D point. had a double entry here. But your entry would have been after the break, right? So this candle breaks up. You got the last push down candle. You got the baseline drawn. Break of structure. Now you got 3 4-hour candles. That means there's 12 hours here to set a pending or just take the trade at market, whatever it is. So you got 36 pips stop. Came right up to that level, just a couple pips shy of that level. So again, logical levels to set your targets. And boom. And look, it came back, pulled back right into that level again and bounced right up. So you can see how strong these levels actually are. Let's see some other trades. So hopefully you guys are getting some value from this. This is actually a good one. I'm surprised this harmonic will probably disappear here in a second. But this is why you do not take the trade when the harmonic pops up, because the D point extends, right? So you see this is the push up candle right where the harmonic appeared. So you would draw your baseline, right? Now we're waiting for price to break down and pull back. Price never broke down. So you're not in this trade. It just keeps pushing up. If I actually move, probably goes away, yeah. Once this candle closes, it'll pop back up again right into this level. So that'll keep you, waiting for that break of structure is extremely important when trading harmonics. This is actually a good setup happening right here. It's got this last push up. Draw our baseline. Now we're just waiting for this candle. It does need to close, because a lot of times you could see it broke down, but now it's pulling back, right? And this could flip around and keep going up. Or it can close down here, and then we enter the trade here and take our targets either right around here or just go 2 to 1, 3 to 1, whatever fits into your trade plan. Scan a couple more pairs. This is another good one. You see the push down, break up, boom, off to the races. So you got your D point, you got your last push down candle, you draw your baseline, it broke up, it pulled back, off. See how easy that is? Here's one. Sometimes it doesn't pull all the way back. You may have missed this trade. Because look, last push up, it broke down. Didn't quite pull back. It was a few pips. It was like 5 pips off. So maybe you missed this one. Focus on getting good entries. This was an easy one right here. Literally to the pip. So last push up, break down. I set my pending right below this pink line. It got in. Had a 10 pip stop. I just went 2 to 1. So got my 20 pips, 2 to 1. I'm out. So hopefully you can see just by watching this video, and you can rewatch this video as many times as you want to really see what I'm looking at. But first thing is, let the harmonic pattern do the hard work for you, right? That's going to spot the pattern. Then all you have to do is follow the last push down or last push up leg and wait for it to break back the other way, and then set your entry point on that baseline you drew. And then just go 2 to 1, 3 to 1, 4 to 1, whatever a logical next target would be. And like I said, I like supply and demand for those logical targets. Or you could just set up, a trade plan where you always go 2 to 1. And if you can't fit a 2 to 1 trade in, you skip the trade. So it really is that simple. It works on anything on MT4, so you can trade cryptos, you can trade gold, US 30, anything MT4 allows you. If you want more training, if you want access to my personal training and personal Telegram group where you can get more one-on-one training, I'll drop the link in the description. Definitely subscribe to this channel because you're going to get a ton of value. You can go through all the videos, see different strategies, see different money management strategies, different mindset. And really the goal of doing this is to help you guys become a more consistent trader and take you to that next level. So if you're brand new to trading Forex, if you're struggling with consistency, watch these videos, watch this video over and over again, get it down. The strategy works. Stick to money management rules that you can follow. And just be consistent. That's really all Forex trading comes down to, is consistency. But hopefully you got some value. Happy trading, and until next time.